Welcome to TradeTheNBI.com. This is John. This report is for the 29th of December. And again, after the big jump up day, we really didn't get much backfill into that, even though we have positive extremes taking place again on another daily, finishing relatively flat. We had marked a positive extreme intraday that filled at the bottom of that, literally right before the close area. Still, we got rising white NBI and just a tilt down in magenta. That's going to have to fade below 33 to be of any concern as far as dip goes, and you're still riding high with DOC green midterm buyers well over cyan. So all in all, still clear. Dow breaking out into the new highs, so that one actually got a little more converged with the ES or the S&P. So that's consistent with that. Readings are even stronger than at least on the NBI reading, but DOC still had cyan running, but green still rising, as well as shakeout, and not quite positive extremes for Dow components. And from an NQ standpoint, weaker overall, but still from an NBI reading, much more robust as far as an NBI reading. That's pretty strong. The magenta rising now well over the 40 level. So that's got to flip down and go quite a ways before it turns to negative, but 3 full positive extremes going all the way back to the 16,000 level. So worth bearing in mind, particularly as we end the year with rotations in that and someone to close out their book and collect their returns as they rotate into other things. We could see some more volatility. Doesn't necessarily change the direction. Gold still holding on to most of its return there. Euro not going anywhere. No expectation for it to go anywhere other than lower, given the excess of the EU move. That's really having a significant impact on business generally, and I think that's going to get worse, which is only going to cause the euro to fade further. USO oil continue its rise, and if that continues to move back towards those highs, those inflation numbers are just going to be out of control. And the Fed doing nothing when you look at it from real term rate, comparatively speaking. You're looking at inflation, it's relatively the same as it was in the late 70s, only they don't track it the same way they used to, but if you did back then, you'd be looking at interest rates that needed to be near 14% to stop it, and we have effective rates at 0. So that's the dilemma. That's why the market keeps rising. Free money is going to keep pushing that higher because it sees a devaluation taking place and adjusting the calibration of the market, not necessarily for earnings, but just for the value of things. Bitcoin, formed a high peak there. We had first on the breakout with the NBI white riding above. Brief little consternation where it kind of went sideways, but then regained some strength with the white proving to go over that, suggested a move back towards the 0%, and that's exactly what happened. And captured that. In fact, I was showing on our Skype chat the performance report. Slide that up just a little bit for you there. And you can see excellent profit factor over 2, still right around 50% from a win rate standpoint. And from a performance graph, just about at its all-time equity highs to end the year. And this is just 1 year performance on that, worth noting. And when we look at it from ETH, Ethereum put in the sell the day before and started out that literally was nothing to do but just follow it. In fact, we need to range just a little bit right at 3,800. And again, that's below that psychological 4K number. Bitcoin, its dip takes it back below 50 as well. So those are, not horrible situations, but it just points the volatility is increasing within the space. And just need to have the right readings, and we certainly have them. Here's the 50K. So we had that entry at 46.11. We actually recognized the turnaround all the way down at 45.70. Taking the sell at 47.73, so good 162 plus points to the positive, and that definitely will put that performance at equity highs. And bingo for its 1 year performance right there. size on that one, but and when you look at the overall 2.9 profit factor on the long side, that's impressive. 53% win rate. Short side, haven't really had tremendous amount of trades because we've been mostly to the upside, giving an overall 50% profitability. But again, I was pointing out the key is average winning trade versus average losing trades better than 2 to 1. Almost 3 to 1 on the long side, better than 2 to 1 on the short side. But that really creates an excellent profile for drawdowns, and you're not seeing that significant a pullback whenever there's negative moves. And it looks for these kinds of runs and takes advantage of them. That's really what creates that outside return on it. From an intraday standpoint, it fits within the one screen, and that's an indication volume is a little bit lighter, but started out with the early pump. Those were all positive extremes as well. They filled pretty quickly into the pre-market session right before the open, popped back to the highs, and then it was pretty much just short readings throughout, and they just kept popping up in each one as we started getting the white NBI readings clearly above magenta, and then it finally spiked really clearly. That gave a move not only to the zero, but brought us all the way to the fill of the positive extreme mark from the other day and pointed out. We still have a couple other ones, 53 and 40, but this was modest weakness. But when a sell moves towards the 50K as well as in the daily, definitely we'll see those filled in place. So all in all, good stuff. Pretty clear from the readings. Didn't require much thought about any of it. Just slow go. So it's just a matter of waiting for it. As always, though, I'll continue to update you on the Skype chat, and you can look for the renewal for indicators to start out the new year. Trade well. We'll talk to you later.